Yesterday, we looked at accounts that affected the accounting equation, and today we're going to be doing the same thing, but we're going to look specifically at transactions that affect owner's equity. Alright, so let's start off with revenue. Revenue is an increase in equity resulting from the sale of goods or services. So whenever a business sells something, they're getting revenue. Okay, they're making money. That's how the business makes money. So the business we're working with, remember, is Michael Delgado and his website business. So he sells websites to his customers. So every time he sells a website, he's going to be gaining money and increasing his equity. Now let's move to sell on account. So sell on account is a sale which payment will be received at a later date. So this is whenever you sell something, but the customer can't pay right now. So they're not going to pay in cash. They're going to pay at a later date. So they're promising to pay you later on. Okay, it's kind of like the same way whenever you go to the NHS closet and you want a snack right then, but you don't have cash. So you promise to pay the NHS later. That's an example of a sell on account. Okay. Whenever we do sales on account, we have to follow the GAAP concept, which is called realization of revenue. This is applied whenever revenue is recorded at the time services are sold. So just because we didn't receive cash, we still have to record that sale whenever it's sold and not whenever we get cash later on. So anytime we do a transaction, whenever we do a sell on account, we still have to record that we made that sale. And accounts receivable is the account used to record sales on account. So let's come down here and look at some of these examples. Make sure you're following along in your textbook as well. On transaction number 6, we received cash from sales for $1,100. So if we received cash from sales, I always like to start off with cash because it's the easiest thing to work with and to remember. So if our business received cash from sales, that means our cash was increased. So I would write plus 1,100 under cash. And then remember, we can draw this line separating the assets, the left side, from the right side, liabilities and owner's equity. We always want to keep this in balance. Okay, the left side has to equal the right side. So if we increase our cash, we also need to increase our owner's equity. So I would add 1,100 under owner's equity, and we need to specify why we had that increase. So let's go ahead and say revenue in parentheses next to it. Now let's move on to transaction 7. So on January 12th, we sold services on account to Main Street Services. So Michael Delgado must have sold a website to a customer called Main Street Services, but they couldn't pay they couldn't pay in cash. So they're promising to pay us later on. So we didn't receive any cash, but we're going to get money later on. We're going to receive it. So we would increase our accounts receivable by $500. And we would also have to record that sale under owner's equity for $500. So we would write revenue next to it. Now let's look at transaction 8. So on January 16th, we received cash on account from Main Street Services. So Main Street Services is paying off $200 of what they owe us. So let's start with cash because that's the easiest. If we received cash, then the cash would be going up by $200. And then in accounts receivable, Main Street Services is paying off $200 of what they owe us. So we need to take out $200 from their accounts receivable to show that they've paid that. Okay, just like if you're paying your charge on NHS and you give Miss Coulter $5, you want to make sure that she writes minus $5 on your charge so that we have an account of that. Okay, so this is an example again of like a wash because we're staying on the exact same side of the equation since those are both assets. Alright, so now let's talk about an expense. An expense is a decrease in equity resulting from the cost used to operate a business. So it's opposite of revenue. An expense makes a business lose money. Okay, so let's say, for example, that you own a lawn business. You would make money whenever you would mow somebody's yard and they would pay you. But an expense would be like buying gasoline for your lawnmower or oil, or maybe you have to buy a new weed eater. Okay, so those are examples of expenses that happen. You have to buy those things in order to operate your business. So let's take an example down here, or let's take a look at these examples, starting with transaction number 9. So on January 18th, we paid cash for communications bill for cell phone and internet service. So Michael Delgado paid some bills for his internet and cell phone. And since he paid cash, our cash would be decreasing by $80. So I would write minus 80 under cash. Let's go ahead and draw our line again so we can help stay in balance. And we would decrease our owner's equity because this is an expense. Now let's look at transaction 10. On January 20th, we paid cash for equipment rental. So we are paying cash again, so we're going to subtract out 400. And our equity would decrease 400 as well from this rental expense. Alright, so now let's talk about a withdrawal. A withdrawal is whenever an owner takes out an asset for personal use. So Michael Delgado is the owner of this business, and if he is doing well and making money, he may want to pay himself or take some money out of his account. So that is called a withdrawal. Remember, you have to keep your business finances separate from your personal finances. So he has to record every time he takes out money for himself. Let's look at this down here on transaction 11. On January 22nd, Michael Delgado withdrew equity in the form of cash for $350. So he's taking $350 out of the business. So we would be subtracting out $350 from the business. And if we take money out of our account, or take money out of cash, then our owner's equity is also decreasing by $350, and then we would state that that was because of a withdrawal. Alright, now let's go ahead and look at the work together. Alright, so make sure that you're on page 22 of your textbook and you're following along as we do this work together. Transaction number 1 says we received cash from sales. So once again, we actually don't have to do the money part. We just need to write a plus or a minus. On your application today, though, you're actually going to be writing the money or the dollar amount. So if I have received cash from sales, if I received cash, I know my cash is increasing. Okay, let's go ahead and draw our line here so I know where my account is separated and where the left side and right side of the equation is. So if my cash increases, I also need to increase my owner's equity. Remember that there's those 4 reasons whenever owner equity can be increased. Why don't you go ahead and write them above here on your work together. So we could increase it with an investment. We could increase it with the revenue, which is the same thing as sales. We could decrease it with an expense, or we could decrease it with a withdrawal. So since this was a sell, I'm going to be increasing my owner's equity by revenue. So I would put the reason why out here in parentheses. Okay, second transaction, sold services on account to Harmon Company. So same thing, we have another sell, but the customer couldn't pay us in cash. They want to charge it on account. So instead of receiving cash, we're going to increase our accounts receivable. And we're still increasing our owner's equity from revenue. Even though we haven't received it yet, we still have to record it. Third transaction says paid cash for cell phone bill. So if we're paying cash, my cash is decreasing, and this would be considered an expense. Any bill you have is always going to be an expense. So I would have to decrease my owner's equity and write Y, and that would be because of an expense. Transaction 4 says received cash on account from Harmon Company. So we received cash. So if I receive cash, my cash should be increasing. And then Harmon Company is paying off what they owe. So we would be decreasing their accounts receivable because they're taking off what they owe us. Last transaction, owner withdrew equity in the form of cash. So the owner is taking cash out of the business. So since the owner is withdrawing cash from the business, we're going to decrease our cash and also decrease our owner's equity because of the withdrawal. Alright, so that's it for the work together. Remember that you don't turn these in, you keep them. These are just for you to study. I'm actually going to go over a few of the applications with you because today you're going to be doing applications 1-3 and 1-4. Alright, so take some time to get out the application problem and make sure you turn to page 26 in your textbook. And you should be at the very top. This says 1-3 application problem. Alright, this is definitely a time when you want to use pencil, okay? This format is not one of my favorites because it's a little confusing, and if you make a mistake, it's kind of easy to get off. This is just to help you get in the habit of knowing what increases and what decreases. So don't worry too much about this format. You're not going to use this for much longer. It's just a good exercise, like I said, to help you know what increases and what decreases on the accounting equation. So here's my line separating my left side of the equation from my right side. So assets have to equal liabilities plus owner's equity. Alright, so let's go ahead and get started. They already did the transaction 1 for you. So transaction 1 says received cash from owner as an investment. So we increased our cash by $5,000. So right here you can see that they added $5,000. And since this was an investment, remember that's another way that our owner's equity is increased. So we have to increase owner's equity out here by $5,000 because of an investment. And then you're going to update the balance of cash. So everything started off with $0 in it, but we're just now starting this business. So now cash has $5,000 as a balance, and our owner's equity has $5,000. Okay, so now let's do the second transaction together. Paid cash for insurance for $1,800. So if I'm paying cash, and always ask yourself the same question like that I am, like start with the easiest, cash. We know that we paid cash for insurance, so cash is going to be decreasing by $1,800. So I would subtract $1,800 here. And we're actually gaining insurance, and insurance is an asset. So I would be increasing my insurance by $1,800. So this is like a wash because we're decreasing and increasing an asset. So now we need to adjust the balance. So 5,000 minus 1,800 would be 3,200. Okay, supplies is still 0, but now prepaid insurance should have a balance of 1,800. 0, 0, and we didn't do anything to my owner's equity to Bethany Hartman Capital, so it's still staying at 5,000. Okay, transaction 3. Bought supplies on account from Hickman Mowing, $700. So since we bought supplies on account, our supplies are increasing because now we have more supplies. So my supplies would be increasing by $700. But we didn't pay cash for them. We are promising to pay Knapp Company later. So since we are paying somebody else, my accounts payable would be increasing $700. My liability, because remember, liability is stuff that we owe. Just like if you buy candy in the NHS room, your candy's increasing, so that's like your supplies, that's increasing. But now you actually owe more to the NHS. All right, so now let's adjust our balances. Cash is staying at $3,200. Supplies now has $700 in it. Prepaid insurance has $1,800. And now we have $700 in our accounts payable to Knapp Company. And my capital is still $5,000. Okay, so I want you to keep this up as you're going. You're going to go through the rest of these transactions. So you're going to do transaction number 4 through 8. Write down what it increases or decreases, and then keep up with your balance. Okay, if you want to check with the sub, if you did it correctly, that would be a good idea. Don't just copy down the answers, but I want you to actually try to do it on your own and then check yourself with the key so you can go back and figure out where you made a mistake or what you did wrong. If you get stuck on something or have a question, just call me or text me and I will help you. Hope you guys have a great day. Bye.